first question I received was, when would you go in the money on options versus out of the money on options? Great question. So there's a couple sides to this that we need to go over, a couple steps to walk through. First of all is we need to understand that in the money options have less premium and out of the money options have more premium. Therefore, the key is being able to identify when it makes sense to be willing to pay more in premium and when it doesn't make sense, when you only want to pay little in premium. And what that comes down to is the likelihood of a big move being made. If there is a good chance a big move gets made, then out of the money options, if there is not a good chance a big move gets made, then out of the money options are not going to perform as well as in the money options. If there is a good chance a big move gets made, though, then out of the money options will perform better than in the money options as those out of the money options get closer to in the money and in some cases go in the money themselves. So the simplistic answer is you want to play in the money when there isn't a good chance of a big move being made, and you want to be out of the money when there is a good chance of a big move being made. So that's all well and good. But now this leads to a natural second question. Well, how do you determine that there is a good chance of a big move being made versus there isn't a good chance of a big move being made? Because that's really what it comes down to when we're trying to determine should we be in the money or out of the money. So with that, there are three main things I look for. Speed, number one, range, number two, and extension, number three. Speed. How fast is the tape moving? All these tapes you see right here, it's after hours, so they're not moving at all. But during market hours, these are all moving. There's always orders going through. How many orders are going through each second? Am I able to count a couple seconds in between orders, or is there tons of orders going through on every second? The tapes are moving very, very, very fast. All right. Then also, what about the level 2? Is the level 2 moving fast or is the level 2 moving slow? Are the bids really racing higher? Are the asks really crashing lower? Or is it just kind of jumping around, slow and steady type movement? If the tape is fast and the level 2 action is fast, then I believe there is a better chance of a big move. If the tape is slow and the level 2 is slow, then I don't believe there's a good chance of a big move being made. If you want to see what I'm talking about, in real time, all you need to do is look at the film, the live trading sessions from today and yesterday, which will be uploaded to the site, and compare them to the live trading sessions from last Thursday and last Friday. Last Thursday and Friday had very fast tapes, very fast level 2 movement. Yesterday and today, very slow tapes, very slow level 2 movement. All right, so that's number one relative to speed. Number two, range. What does the daily range look like at the outset of the day? Is the stock moving in a very tight range through the first 10 minutes, 20 minutes, 30 minutes of the day, or has there already been a decent move made within the first 10, 20, 30 minutes of the day? Moreover, is the stock showing you a move pre-market? Is there volatility pre-market? Is there a good range pre-market? Is it up 1%, down 1%, or is it pretty much flat? Again, the last 2 days, my primary stocks have been relatively flat. Last Thursday, Friday, a lot of these stocks were sitting on percentage gains or losses of at least 1% in either direction. In my experience, I feel that when a stock is able to show good range early on in the day, it has a better chance of continuing that range throughout the day versus when it is in a tight range early on in the day, then it's more likely to be that way the entire day. Let's look at some examples here relative to range. So starting off, I want to show you Amazon from last Friday and then on Monday and compare it to yesterday and Tuesday. So number one, what I want to show you, okay, is the daily chart on Amazon. You look at these last 4 days here, a great contrast in daily range. You look at Friday and Monday, and then you compare it to today and yesterday, and you can see Thursday you traded in a range of 316 on the high, 302 on the low. That's a 14-point range. Then on Monday you traded 304 on the high, 288 on the low. That's a 16-point range. So those 2 days, Friday and Monday, averaged a 15-point range. Great range action. Then on Tuesday, you had 301.80 on the high and 290.45 on the low. So you had about an 11-point range. Then today, you had 304.50 on the high, 298 on the low for a 6-point range. So the range much, much smaller yesterday and then especially today compared to Friday and Monday. And if you dig a little deeper and look at the intraday chart, you'll see that there were signs of that very, very early on in the day. Friday, real wide range type of day, right? Well, look at the first 6 minutes of the day. You're looking at a 3-minute chart. This is last Friday's price action on Amazon. You can see the stock opened at 316 and within the first 6 minutes of the day was down at 308. So you put in an $8 range right off the bat. First 10 minutes of the day you went down to 307 for a $9 range. You look throughout the course of the day, Amazon gave a good move here to the downside and gave a nice bounce back up. Then it gave a nice steady move back down. Just a lot of nice solid movement on Amazon after experiencing a lot of range action within the first few minutes of the day. So in other words, a wide range early on in the day translated to good range throughout the entire course of the day. Then again, you look at what was Monday. Same thing on Amazon. Awesome move right away, right? Great range movement. First 10 minutes of the day, the stock opens at 304, and by 9:40, you're trading down to 292, a 12-point range within the first few minutes of the day. So based on that, even after we only see this much in price action from Amazon, okay? So even when we're just at this point in the day, we're starting to think, okay, wow, that's a lot of range right there. So based on what I know about range, or at least what I think I know about range, Amazon should then be pretty volatile the rest of the day. It should continue to make nice ranged movements. That's the thought that's starting to come into my head, very early on in the day. And then lo and behold, what do you have? Some really nice tradable moves on Amazon. You bounced from 290 up to 298, 296. Then you traded back down from 298 back down to 290, 289. And then you traded again back higher from 290 back up to 296. So just 3 awesome 6-point moves from Amazon following that really good range action the first few minutes of the day. So remember what I've just showed you now from Monday and Friday. Now let's fast forward to yesterday and compare. So we had a 9-point range first few minutes of the day on Friday, and then a 12-point range first few minutes of the day on Monday. Look what you have here though from Tuesday's price action. Amazon opens up around $297, and legit the first 10, 20 minutes of the day, there is a major limitation on the range. It comes in greatly. You go from, a 12-point range at the open on Monday to now you're trading 298 down to 294, 295 or so. You're in a 4 to 5 point range at Tuesday's open. So based on that, I would be thinking to myself, all right, range has come in quite a lot, so Amazon's probably not going to offer as many tradable moves as it did on Monday and Friday. And that was the case. There was really just one primary move. Now, this was certainly a tradable move up, but, would you rather have one good move to trade, or would you rather have multiple good moves to trade? Yesterday, Amazon really only offered one good move to trade, and that was this bottom from 10:30 to 12 o'clock, whereas Friday and Monday, it offered multiple moves to trade. And again, your range was much tighter, okay? So that translated to less range overall on the day. And then today, it really came in and showed you what you needed to see in terms of, when the range is going to be very tight. You look at today's price action. Right off the bat, Amazon trades from 298 on the low to 301 or so. So about a 3 to 4 point range, first 5 minutes, 10 minutes, 30 minutes of the day. So, and you guys know I was saying this on Amazon and a lot of the portion of the day today. As soon as you see this show up, just this super tight range, you've got to be thinking to yourself, all right, well, this probably isn't going to translate well to good range on the day from Amazon because it's showing very tight range right now. So maybe it's likely that it just kind of continues that throughout the entire course of the day. And as the day went on, you can see from Amazon just, awful trading for directional traders compared to what it offered the last few days, specifically on Friday and Monday. There's really not a move here. There's this move here, but even in that move, you went from 299 up to 302 or so. Aside from that, you were sideways for an extremely long portion of the day. When you finally did break high day, you only moved up $1. So, I don't really want to trade that. So that's an example of range. Also, let's look at Netflix for an example. Netflix from April 24th is what I want to show you guys. All right, so here you are on Netflix. So this is the open of April 24th. Right here. This is your opening price action. So right away the stock opens up, goes up, opens around 350, 353, runs up to 356, but then within 5-10 minutes this thing is back at 350. So nice range on Netflix right away at the outset. So that tells me as soon as I see that, all right, volatility here. I want to play that. There's probably going to be good range on the day if the first 5 to 10 minutes are any indication of what's going to happen next. And as you can see from Netflix, good range first 10 minutes translated to just an awesome range move. The next 45 minutes to an hour, Netflix went from 348 down to 346, and then just an awesome move back higher as well, 335 to 344, and then another one from 338 to 348. and then a decent leg lower from 346 to 340. So, lots of tradable opportunities on Netflix, and it showed you within the first few minutes of the day on the 24th that it was going to offer a lot of movement and a lot of good range. Now you compare that to today. How is it different? Well, here's our open, right? Here's our opening price action. Not a lot of range from Netflix. You opened near 320, you went down to 316, you're just trading in between that range pretty much first 15, 20 minutes of the day. So at this point I'm thinking, all right, Netflix probably isn't going to have much range today. Probably not going to be many windows of opportunity. And you can see that was for sure the case. Yeah, you had some moves, but nothing like the movement from the 24th, the example I just showed you. It played out much more slowly, and it was just tighter range action overall. You can see you went from 316 down to 312 or so, 311, played out over a course of a couple hours. In the example I just showed you, Netflix dropped 12 points and then 8 points, within the course of 60 minutes. The best move on Netflix was this rally here today off of the 312 area back up towards 320. Still though, that's an 8-point bounce that took 4 hours to make. We just looked at an example where Netflix was able to bounce 8 points with, in under an hour. So another example where a tighter range early on shows you a tighter ranged opportunities throughout the day. Wider range early on indicated wider range opportunities throughout the day. So that's number 2. First one was speed, second one was range. All right, now the third one, extension. Extension, meaning when we put in a range, what does an attempt to get out of that range look like? When a stock makes an attempt, on the daily or 15-minute sequence, 60-minute sequence, whatever, whenever it's trying to break out and move out of that range, what does the subsequent price action look like? So let's stick with Amazon and Netflix here for examples. So looking at Amazon today, so here's your range on the day, right? And we know today was a tight range day. All right, so we've got this high up here around 303. So what I'm thinking about in terms of extension is, what does Amazon's price action look like when it tries to break out at 303? All right, well, you can see you finally got up near 303 going on after 2 o'clock. And what did it look like? Well, it looked pretty piss poor. It got up near 303, but it couldn't break out. How come it wasn't able to just clear 303 and start running? All right. When I see this action here, when I see the struggle at 303, the inability to extend out of the range, then I'm not optimistic from a trading opportunity perspective. And then, lo and behold, when you do finally break out above 303, just ahead of 3 o'clock, you're only able to move $1. The move doesn't end up getting sustained, and you come right back down beneath that level. All right, so that is an example of a lack of extension. Now let's look at an example of good extension. Again, going back to Netflix from 424, or no, here we are. 428. All right, so Netflix gets established in a range, first couple hours of the day. All right, we've got our low is at right around 308. So notice when Netflix starts to approach 308, notice, unlike the Amazon example I just showed you, it's able to move right below it right away. It doesn't, really hesitate at all. It makes a nice clean move down to 308 and is just cracks below low of day and then continues. And notice how that resulted in further pressure, from 308 down to 302, and then from 306 on a bounce back down to 300. So that was an example of a good clean break below the range where you were able to extend lower. So I would want to be trading that. I would be short biased on that. You had the same thing from Netflix on the 25th. So your low gets established the first few minutes of the day. You come down to it right here. You don't hesitate going below it. You're able to just flush right through it, and you make a nice move down from 334 down to 328. Then again, you have this low here. You come down to it, and you just go right below it, and you get another leg down from 326 down towards 324. So those are examples of, good range extension where you're breaking down and you're not hesitating on the breakdown. You're extending the range right away, unlike the Amazon example that I started out with. Oh, there's one other example, another good example of a bad breakdown from Amazon from the day it reported earnings. So here's your low that gets established. All right. Notice on this, yeah, you break below the low at first, but then you come back up right away. You're able to come back above it, unlike the previous two examples I just showed you. You didn't extend lower, so that right there, that's a bad sign from a trading perspective. Okay, so I'm not betting on a bigger move. And then on the next low of day test, I don't want to get suckered in to buying puts at the low of day break because it already showed me when it broke to a new low of day, it didn't continue to extend lower. And sure enough, if you just stretch it out here and look at it, you can see the exact same thing. This low that got established ahead of 1030, when it then got tested between 1230 and 130, you can see how poor the reactions were to the downside. And each time it was able to kind of come back up. Now, you take all those things and you kind of put them together. The speed of the level 2, and the speed of the tape. You want to be watching that as the range is either extending or not extending. And by using all those combinations of analysis, you can determine, is there good volatility or is there low volatility? If there's good volatility, chance of a big move, you want to play out of the money. And if there isn't, then you want to be closer to the money. And that's exactly right. Big range days, gamma will accelerate as the delta moves through the strike zones, so you're going to benefit from being out of the money. But if you're on tight range days, then that's going to work against you.